Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for July 5th. Well, the yen's opening stronger in Europe and sterling weaker as risk aversion seems to be taking hold again. But the euro is also gaining. The return to risk aversion may be because the news flow today will focus on the UK even more than usual. For the news, we have the first round of the Conservative Party leadership elections. 5 people are running for the head of the party. Today's election among members of parliament will winnow that down to 2 people, and then the whole party will vote on them. Home Secretary Theresa May, a Remain supporter, is in the lead. Away from politics, the Bank of England issues its half-yearly financial stability report, which involves a press conference by Bank of England Governor Carney. Now, Mr. Carney's previously warned that Brexit would be the most significant domestic risk to financial stability. Okay, now that it's come to pass, investors will want to see A, his detailed assessment of the risks, and B, what, if anything, he plans on doing about them. There's talk that he might relax the amount of capital the banks must hold in order to encourage them to lend. He could also ramp up various methods the bank has to encourage banks to lend. Finally, he may give some hints on whether or when rates might come down. Now, moves to increase lending could be positive for sterling, while anything that suggests rates are likely to come down earlier than expected would be negative for the currency. Currently, the market expects a rate cut probably by the August meeting or maybe later. As for the data, last week's market manufacturing PMI rose far more than expected, but yesterday's construction PMI was a disaster. Apparently, construction was hard hit as people put off major decisions ahead of the referendum. Today's UK service sector PMI and composite PMI are expected to be somewhat lower than in May, but still show the economy expanding. My guess is if the figures beat expectations, they'll be dismissed as old news, given the shock to the economic system. While if they miss expectations, it will only confirm that the economy was relatively weak going into the referendum. So, net-net, the data will probably be negative for the pound, in my view. For an update on the U.S. indicators coming out today, please watch my North American opening market comment later in the day. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.